So hello guys and welcome back to another live stream on this channel. So I hope you guys are doing well. Thank you so much for your time and for your support to this channel. So we have grew the account to up to 130 subscribers already. Thank you, massive thanks to all the people who are pushing the channel up every day. So I hope you guys are doing well. Thank you so much for joining my live stream again. And I really appreciate having you here guys. So today we're gonna talk about a lot of stuff because interesting news came out yesterday. So we're gonna analyze what happened on the markets yesterday. We're gonna go through all the important um stuff that happened on the market because as you guys know, yesterday the FMC held so many um interesting conferences and we can call them whatever interesting events. First of all, we've had the crude oil inventories, we've had the crude oil inventories. We've had also the Fed press conference. You also had the Fed, investing.com. So we've had we had the Fed press conference, you had the Fed statement. We had a lot of stuff going on yesterday. And yes, this all plays a role in the global market, especially in the conditions we have in today's market. So if you guys want, you can dive in through the geopolitical conflict first and then move on to what's happening in the US market, but we can also start with the US market, okay? So I see quite important news today. So let's analyze them all together and we'll have a clear idea of what is happening in today's market. So let me just log in to my account here, investing.com. And then we're gonna start analyzing together, guys, okay? Okay, so the US Fed permits sanctioned Iranian oil currently stored in vessels to enter the market as part of effort to manage rising crude prices, Treasury Secretary Scott Bessent said on Thursday. So, Bessent said there were approximately 130 million barrels of Iranian oil on water that could be utilized to keep prices down. The Treasury Secretary indicated that US has allowed Iranian oil to continue flowing out of the Gulf despite ongoing tensions. The comments come as benchmark Brent oil prices jumped above $119 a barrel Thursday after Iran attacked energy facilities across the Middle East. So these are important news as you guys can see here. It's so important because first of all, we can directly analyze that the US is kind of not so tensions on this war. So you can see that the US is actually being generous for Iran. And you can see that the US doesn't have a real way to actually end this war because as you guys can see, I don't know how they're allowing it, but it's allowed here. So this is quite unexpected, okay? So we can feel that the US is actually on a no idea what to do situation, okay? No, not the largest use, I want the most popular. So Brent oil hovers near 150 after retreating from earlier spy amid supply fears. Mm. So what happens next in Hormuz? This is our question. This is the question we've been asking for a while. What's happening next? In Hormuz, we don't know. So the economists and strategists have revised their forecasts on Thursday following the blockage of the Strait of Hormuz, which has forced oil tankers. Oh, Leon and Janet Grove, thank you so much for the comments. Thank you so much. Thank you. Well, we are watching oil right now. We are actually discussing what's happening next for oil, and then we're gonna analyze what's gonna happen, okay? So we're going to analyze what's going to happen to the oil market on the next few days. Please check MSTR. Sure, why not? Okay, so I wanted to go through all of this later, but um, Janet Grove asked me to go through MSTR, and why not? Okay, so first thing we do, as I always tell you guys, look for the support, the resistance first, and then move on with the market. Okay, so look for these. First of all, you gotta find all of these here. So we've got our resistance, our support at this level. Okay, so this is the support and this is the resistance level. First of all, as you guys can see here, well, this is MSTR from Nasdaq, and yes, we're actually on a bearish movement, if you want to say it. So we're back to the oldest support zone. We can see here that we have hit this point for roughly 3 times. Okay, exactly this point here, 102. We have hit this point many times, and we're back to it again. Then we can see that once we reach this zone, well, we went through it the first time, second time, and now back to it after exactly 1 year and more than 5 months, okay? And we're back to this zone again, same zone. After more than 1 year and 5 months, 17 months later, we are back to 102. And yes, as you guys can see here, pull back and then the market goes up. Then we went to the other support zone here. So this is a support resistance zone that's closer to us. We can talk about this here, okay? So this could be a one also here. But this is where we play. The liquidity is concentrated around 135. So if you guys got other questions regarding MSTR, please let me know. And if you're asking me about whether to buy or not, I will suggest waiting for a while, okay? Either it's either you have to wait till it is zone, then you buy it, or you have to wait until you break out through this zone and then go and get your order in, okay? But for now, it's kind of unclear, okay? So, what happens next, Zormus? We all want to know the answer. So, we all want to know what's going to happen next in the Strait of Hormuz, okay? As I told you guys, first of all, the economists and strategists have revised the forecast on Thursday following the blockage of the Strait of Hormuz, which has forced oil tankers and cargo ships to reroute. So we have three scenarios here. First one is assume intensive combat will end within 2 weeks, but will be followed by lower intensity strikes lasting several months. The opening of the Strait of Hormuz is expected to take longer than initially anticipated. How is the Iran conflict currently impacting the stock market? Well, that's a great question. That's a very important question. Thank you so much for your question. So, if you want to say how this Iran conflict is actually impacting the stock market, if you go back to all the major indices here in the US, for example, if you go through the S&P 500, well, we can see the pre-war level, and then you can compare it with the post-war level. So we're actually on the third week on this war, and you can see that before this war started, back in 24th February, we were at the top for the S&P 500, one of the most, if not the most important index the for the US market in general, and maybe the whole world. So, as you can see here, before the war, we were at 6,943. Now we're paid at 6,568, which is actually the oldest the we have had the support here, right, guys? If you remember on the last video, we used to have a support level around there, and as you can see here, we're breaking through the support level again. So if you also go through oil prices, well, this could be enough to show you guys that fundamental and geopolitics is very important for in the market in general. So before the war, we were at 54. Now we're paid at 96.67. We even went up to 119, 120, and now we're back to 96.71. Okay, so this war had actually, we can say it impacted the market by far. If you go through the Nasdaq also, as you guys can see here, we're hitting the same support zone for the sixth time already since the war started. So here, oh no, after, so around, yes, here. So when the war started, we were at this level, yeah, 25th February, or even we can say after, okay? So 3rd March. So you guys can see here that in the 4th March, for example, it was 25,247, $1,000 less, okay? So that's big valuation lost in the market already. That's more than 5% of the market valuation that disappeared just because of the war. And also we're running out of oil in the world because 20% of the world's oil is actually passing through the Strait of Hormuz, which is actually being closed right now. And well, ships cannot even pass. So all of the oil that passes through the Strait of Hormuz is right now blocked. So the Iran conflict has actually impacted the market a lot by far. So the second question is, do you think the market is underpricing geopolitical risk right now? Well, yes. And that's what I was telling you right now. Thank you again for a great, great question. As you can see here, the market has suffered a lot. And last week was the worst week for Wall Street since last October. So, yes, the war is hurting. Yes, the war is impacting the stock market in general. And yes, the war is underpricing the market, okay? So this is the price we pay for having conflicts in the world. And the US government knows about it. But we're still not seeing any improvement on the war. We don't even see a proper, we cannot even see a proper development in the war, okay? So we don't see any proper development. We don't know if it's going to be fixed in the next few days or nothing. So this is got a big problem, okay? So the US stock futures dip as soaring oil prices. Fed outlooks spook investors. So let's go back to our subject of the day. First of all, before the geopolitical conflict, I wanted to talk about the situation, about the what the Fed did yesterday, okay? So Wall Street ends sharply lower after Fed keeps rates unchanged. The crude prices reversed losses. The Brent closed up over 5%. The Fed holds rates steady, as expected, by the way, of course. Micron climbs ahead of report. The S&P 500 minus 1.36%, Nasdaq minus 1.46%, and the Dow suffered the biggest loss, minus 1.63%. So, Wall Street ended sharply lower on Wednesday after the Fed Reserve held U.S. interest rates steady and projected only a single rate cut for the year as officials took stock of economic risks from surging oil prices and the U.S. and Israeli war with Iran. New projection from U.S. Central Bank. The policymakers showed the Fed's benchmark overnight interest rate would fall by just a quarter of percentage point by the end of this year, with no hint of timing. So the Fed chair, Jerome Powell, had a news conference and reiterated the uncertainty the war creates for the economic outlook. So the economy has not expected the Fed to change its interest rate. You all know this. The Fed is on hold with inflation running above target and the economy running above trend. And elevated uncertainty about the path of the Iran war, there is no argument for easing policy, said Michael Rosen, chief investor officer at Azure's Investments in Santa Monica. Mm. So these are the S&P 500 governance so far in 2025, 2026. So SanDisk had the biggest um upgrade, okay? So it declined 1.36% to end the session at 6,624. Its lowest close in nearly 4 months. Because yes, if we see it's true. So this is the lowest for the S&P 500 since exactly 4 months. Since November. They're talking about the worst week for the war in 9th of October, and right now we have a new worse week than that time. Gold has dropped 5%. Are you still confident or already nervous? Well, gold is something that's always trusted, so this could be a signal, a potential signal to buy the dip, because as you can see here, we have a phenomenon that's happening. We have a support zone has already been hit, and you also have this zone here. With money teacher, I didn't sell my coin position when it hit the resistance level. My cost basis is 300. What should I do now? Thank you. Well, why not? Why sell? If you can still hold, if you don't need the money, why should you sell? You can still keep it for maybe later when you have better conditions in the market and when you're actually good enough to not actually sell, okay? So you can keep holding. Why would you sell if you don't actually need the money? We're investing here. We're trying to invest for the future so you can still hold the money for later also, okay? So for gold, as you can see here, it plunges 5% to 4,560 per ounce on Thursday. Its seventh straight session on declines and the lowest since early January, as investors recalibrated rate expectations following a wave of hawkish central bank decisions and soared energy prices amid the escalating Iran war. The US Federal Reserve held rates steady, citing the uncertain economic fallout from the Iran conflict and persistent inflation risks. Policymakers signaled low rate cuts until inflation clearly eases, with Fed Chair Jerome Powell acknowledging a hike remains possible, though unlikely for now. In Japan, the Bank of Japan governor hinted at a potential April rate increase, while the Bank of England anonymously hit rates but adopted a more hawkish stance than expected. So, Dia thinks gold is going down. Mm. So, Dia think gold is going down. Well, thank you for the information, Dia, but just for the information, the gold has been down for nearly 7 days already, like today on a row. So we have 1, 2, 3, 4, 5, 6, and this is the 7th day that we open on a low, and we're still going down. So we open the market at 4,800. We have lost all of this value just today. That's more than 5%, okay? That's very, very bad for the market, and the gold market is losing a lot of valuation. Is this a sign to sell? No, it's not. No, 7, not 6, 7. You think you know more than me? Okay. So here, as you can see, this is a support zone. We never know if the market is going back to this zone, and then you can see something like this. For example, you can clock it, for example, like this. No, not this one. So you can see the market clocking it like this, for example. This could be a situation that's going to happen next. I was buying potatoes so I can eat lunch, but a friend of mine bought gold instead. Oh, that's a good thing. That's a good thing. But don't tell your friend to sell gold, okay? So don't tell your friend to sell because it's not a good sign. He can also keep the potatoes. You're gonna keep the potatoes. That's a good market. If you go to the potatoes market, for example, let's see here. Oh, there's no potato. That's bad. You will sell gold. No, don't actually. Dia, don't sell gold. You can still keep it because you said so. Don't sell gold. I didn't say gold. I didn't say so. I didn't say so. Don't make me mad. I didn't say so. Don't make me nervous, okay? I'm on my period. I'm on my period, please. Don't make me nervous. I will have a mental breakdown, okay? I'll have a mental break. I had a mental crash out, I said. Oh my god, I need to see a doctor. I need to see a doctor as soon as possible. Oh my god. Mosiemo said so. Oh, okay. So I said, for example, for gold, we can have this kind of situation where the market is just going to correct in this level. If you go to this level historically, let's see if we can find something. Okay? Oh no, we never reached that level before. So for gold, I tell you guys, don't sell. The price of gold will rise next. This is the situation that's gonna happen. So this is what's gonna happen, okay? So we can see such a situation happening next in the market. Oh, that's bad. Oh, okay. So as I said here, for example, as you can see, in this situation, we can have the market bouncing back to 4,413 and then going up next. And this could be the situation that's more likely to happen, okay? So I am telling you guys, if you want to buy gold, wait till we reach this level here. Once we reach this level, around this area, then you guys can actually go and buy here. If you don't see any situation where the market goes actually down, here, if this doesn't encounter, there are two possibilities once we reach this level of 4,413. Either we keep going up or going down. So this is what I think is going to happen next for gold, okay? So the gold is hitting the 6-week low. Wow, that's actually very bad for the market. We didn't expect it. Do you think there are any good stocks to buy at the moment? What do you think of MU? Okay, let's look for MU here. Micron. Okay, Micron, that's your favorite. Okay, for MU, first of all, this chart is not clear. I'm not really trading or something like this. So for MU, I cannot really analyze it because the chart is not really clearly made, okay? The data is not clear. Everything about this chart is not clear. Oh, so Dia thinks Apple is a good investment. Yes, because one apple a day keeps the doctor away. You can buy apples, for example. They are good for your health. So apples are good, as this guy said. Yes, one apple a day keeps the doctor away. So let's check on Apple. So as you guys can see, our strategies are working every time. So here, you can see that we went back to the support zone. As I drew before, it went down and now it's going up. So today only, we went to $246. Then the market went to 250.74. And now it's going up. So help me analyze Circle. Sure. Okay, so once we finish with Apple. So strong start for iPhone sales in China this year. As you can see here, so all the information about China. Apple's China smartphone sales jumped 23% to start 2026. Okay, so let's move on to Circle next. So this is Circle, and as you guys can see, we're not on a long time high. We're actually on lower levels than before. As you guys can see here, we are on lower levels. Okay, so let's analyze Circle together. First of all, as you guys can see here, it's not really. I don't think Circle is a good investment. Okay. Yes, I think the same thing too. I think the same thing too. Can you give me information about silver? Well, silver is not that good. You can gold is better. You will look better wearing gold. I think if you wear gold, it's going to look better on you. Okay. So silver is not that good. Don't wear silver. I'd rather you wear gold instead. It's more expensive. And you will look like a rich guy who eats yogurt and apple. So apple this one with yogurt for Sahara. So as you can see here, it went up for the resistance zone at 131, and then it's going down here. Okay, so as you can see, it went up, see the correction, boom, go down. This could be the situation that's going to happen. No, I'm not sick. Thank you. I'm not sick. I'm kinda retarded. So here we have this next level. So this is silver. My cost basis for Tesla is a little over 420. Can I still add to my position right now? It already counts for 40% of my portfolio. I don't think Apple has a large profit margin. The only fluctuations occur around Apple's product launch events. Oh, I agree with you, Emily. And Dix is also agreeing with you, okay? So Dix is also agreeing. He said yes. He agrees, and I agree with you too, Emily. But at the same time, don't forget, if you go through the news, we can explore everything. First of all, they said they have a strong start for iPhone sales in China this year. By Jia Huang, Apple's iPhone sales in China started the year sharply higher, helped by discounts from online sellers and government subsidies. Apple sales in the country in the first 9 weeks of the year rose 23% compared to the same period of a year earlier, according to Counterpoint Research. The surge came amid weakness in the Chinese market, as overall smartphone sales in the same period dropped 4% on a year. So the Chinese smartphone industry has been pressured by subdued consumption as well as rising costs for memory chips. Some Chinese smartphone makers such as Oppo and Vivo have raised prices for existing models. Apple is unlikely to follow suit, instead absorbing part of the margin pressure and using the situation to potentially expand its market share. Yesterday, I bought an Apple 17 Pro Max because I invest on the Apple market. That's a good thing. That's a good thing. So now you'll have more money. You're making more money. That's like a money hack, actually. So you bought it, and then the money's literally going back to you. That's a very smart decision. It's a very smart thing that you did yesterday. That's great. That's actually great. It's so interesting what you did. So keep doing things like that. You can also buy chips if you buy chips. You can also buy Nvidia and then go buy chips, the ketchup chips, for example. You can always do it. Okay? So this is Nvidia, and then go buy chips. Then maybe this situation is going to happen. It will go up directly when you buy them, okay? And you can let me know what happened, okay? You're welcome, Dex, you're welcome. Every time. Anytime I'm here for you, okay? So this is just what I'm trading. What liquidity? I see what's happening through the market and then I take positions. If the market gives me clear signals that it's going up, then I'll go through positions that will get me to go up. I love you. You motivate me a lot. You're welcome, Dex. You're welcome. You're welcome. That's all right. So as I said, we trade through liquidity, support, and resistance. I learned stuff from you. Oh, that's great. So as you can see here, the market is going up and Nvidia is actually facing a consolidation level. And as I said, while I trade is liquidity. I see through what's happening through the market and then I go and buy through market sentiment and what's actually happening through the market. Okay, so you gotta understand the context first and then go and get into your position. So this is one of the most and smartest decisions you can make today. I have joined your community. Will you have an assistant do the analysis or will you do it yourself? Well, actually, I'm doing the analysis myself. Everything I do, every trade I make is same as the things I give you on the community, okay? So the things you see here are the things that I actually use for my trading. This is how I make money. Same way of the trading I show you guys here. So Tuesday market is actually going up due to the surge because a very important event is coming next Saturday. So it's going to push the markets up, up and up along. So this is a good time to invest on the Tuesday market. But for the baby market, we are not, we don't know yet, okay? So we are not sure. So we are not sure if the Tuesday market is good to buy right now. But we can always check on the future and see what's going to happen next before buying the Tuesday market or the baby market. There's also DD market, which is a good market too. You can try that one. It's actually an interesting market. You can also try it. So as you guys can see here, and as I told you guys before, this as you guys can see for Tesla next. So move on to Tesla. Someone asked me about Tesla on the comment section. So my cost basis for Tesla is a little over 420. Can I still add to my position right now? It already accounts for 14% of my position of my portfolio. Okay, so it's good to buy Tesla. So you said you bought around this level. So let's mark it so we can discuss properly. So this is where you bought here. So it could be somewhere like here. And then the market went down. Well, this is a good buy opportunity, especially if you wait to reach this level. If you don't break beyond this level, if the market is going to do two things right now, it's either going to be something like this or it's going to be something like this. And here, it's going to be another rectangle because we have two scenarios, okay? So the first scenario is the market is going up. So let's make it go to the same level. Or the market is going down, okay? So the market will keep going down. So these are the two situations we have for the Tesla stock, okay? So we have these two situations only. I would like to learn from you. Has your trading method helped you make a lot of money? Of course, as I said before, my portfolio is over 10 million US dollars, okay? I can show you guys in private. You can send me a message. I can show you my portfolio. And as I said, um we actually have a trading group where you guys can join and then you can discuss together and you guys can learn a lot from us. So if you guys want, you can join our WhatsApp group. The link is in in the first comment. Yes, you can check the first comment and click on the link. Then you will go and check it out. So as you guys can see, if you got any question, please let me know in the comment section. I'll be very, very happy to help you guys, okay? So please ask me in the comment section and I'll be waiting for your questions, guys, okay? And welcome to you all. Welcome. Thank you so much for joining. At what price it Tesla make the purchase? And at what point should we stop making a profit? Well, as I said now, for Tesla, this is my analysis here. Okay? So let's make it more clear for you guys. So for Tesla, we have two situations. It's either the market is going up now at this level, or it's going to make a correction at this level here back to the first support, and then the market from the zone is going to decide whether it's going to keep going down if you don't find proper institutionals who will invest in buying more stocks, or else the market will go down because we don't have buyers that will support the market to go up. So if people don't buy the offer and sell the bid, that's going to decide where the market's direction is going. But for now, as I said, we have two key ideas, but also that depends on what's coming next for Tesla. So we can also check the fundamentals of Tesla. So let's go through Tesla, check the earnings, check what's coming, check everything coming for Tesla first, and then we can decide also. So the revenue estimate for the first Q1, the next report is April 28. So if you keep on going down, we're gonna reach this level by April if we reach this level exactly at, okay, where is 28, okay? So for this situation, if we keep going down until April 28, so then the market is going to decide here. If we reach this level by April 28, this is a great sign, okay? So this is a great level. Why? Because here at April 28, there's something coming, which is the report date of the revenue. Then if the revenue goes up, that means the market is going up. If the revenue goes down, we can see the market going down, okay? So the revenue per employee is 700K USD per year, okay? And the net income, we spend roughly 28K per employee each year. So as you guys can see here, we can shift everything related to um to to Tesla, and then we can also decide whether we should actually buy or not. Musk speeds up Tesla's next gen AI chip. Look, Tesla looks like it's trying to move faster on its AI roadmap, with Elon Musk saying the company could tape out its next generation AI 6 chip as early as December. So I didn't finish yet. On this one here, I was just answering all the questions from people. Now we're gonna go back to analyze what happened yesterday in the market. So oil jumps above. Okay, Leon, that's all right. So you want me to analyze TSM. So for TSMC, you bought at 345, okay? So we need to go to that level first. And then we can actually decide whether you should stay in the position or not. So we have all of these levels, level here. So because the source is not clear, I cannot really make a decision whether I should tell you to what to do. But in the direction, we can also analyze what's actually coming. So you're at 333 and the candle doesn't seem to look okay. So let me make it 4 hours so we can actually decide. So as you can see here, the market is actually going up and down and we're also in a consolidation level. So we have to wait until the market gives us a sign. Not everything should be done as soon as you want to. We should wait for the perfect opportunity and then we can make a decision. But for now, we don't really know what's coming next for TSMC. Okay? So let's go through the economic data calendar. So we had the new home sales. It went down 587. So let's go to yes. Let's see here. So that suggests what should you do? You should actually just hold TSM for the moment until the market gives us a clear sign about what's coming next for this stock, okay? So the Fed Reserve held rates steady but continues to project 25 BP rate cuts in both 2026 and 2027 as they seek to optimize policy to deal with upside price risks from energy and set against a jobs market that has cooled and faces more headwinds. Fed believes in the productivity boom. There is nothing particularly surprising from the Fed Reserve outcome, a no change decision with a target range of 3.5% to 3.75%, with only 70 million dissenting by voting for a 25 BP cut. So as you guys can see here, um, the situation is a bit tense in the US market, okay? It's a bit tense for the market because we have a lot happening in the world. So let's go to the news world. Well, Palantir. Okay, let's go back to Palantir, guys, okay? Palantir Technologies. So what's happening through all the US stocks. If you go through all the US stocks, you're gonna find it's either consolidation or some no idea movement happening there. So it's the same thing here for Palantir. We don't see a clear path for them because everything is kind of happening in the same way, okay? So, and so we don't really know what's going to happen next for Palantir because here the situation doesn't look that good, okay? So for Palantir, I don't think will the war affect it or no? That's actually a hard question to answer because you don't really know what to do in this market situation, okay? So in this situation, we don't really know what's going to happen next in this market because first of all, as you can see here, it's consolidated in this level here, exactly in this level here. Well, it's actually consolidated, okay? As you can see, there's already movement happening in this market, and so it's very hard to decide whether it's a good sign to buy or to sell. So you should wait until we hit this level. SanDisk common stock, let's go. So by the way, SanDisk has gained more than 250% since the start of the year on S&P 500 based on S&P 500. So let's check it out. Long term. So as you guys can see, this is the only stock where we actually see it going up. As you guys can see here, it's the only stock going up. So from all the stocks, we all see them. And by the way, we're hitting a new high. We just got a new high yesterday for SanDisk. So we just got a new high, and the situation of the market seems a bit unclear. So this is a situation for SanDisk. We're at 743. That's a long time high for the company. And you can also check out what's happening here for SanDisk. So it's an outperforming stock, by the way. Sales growth remains key. Margins are critical and innovation keeps you ahead of the competition. As I always say, it's about the revenue, it's about anything. It's about innovation. Is the company or investor actually making profit? Do you see not actually making profit, sorry. Is the company actually investing in the future? Do you see new innovation? Do you really trust that the company is going to release stuff that people really want to buy in the future? This is the most important thing. So as I told you guys, here as you can see for SanDisk, it's actually going up. Then we have this resistance level that the market goes down again. So it's very important and you guys should take care of it. So 751 USD. And can an MSFT be held on long term? Let's check it out first, okay? For Microsoft, up here and another one of this level. Then we can draw our other here. So my trading is actually long-term investing. I see stocks as an investment. And by the way, this is the time to buy Microsoft, okay? Oh, I see something important by the way. I see something very, very important. No, sorry, that this one. So as you guys can see, Microsoft disputes OpenAI's use of Frontier on AWS, saying it might violate their Azure-only deal. Companies are negotiating, and Microsoft has warned it may pursue legal action to enforce exclusivity. Hmm. That's very important, actually. That's very, very important. And let's see what the future holds for Microsoft, okay? So the next under report is coming in 40 days exactly. That's like 28 of such same period um as what do we call it? As Tesla, okay? Same period as Tesla. So someone asked me about um oh, where's the message? It disappeared. Oh, it disappeared. Okay. So as I said, guys, for for especially for Microsoft, we're back on the support level at 390.55. And in this level, you can just go and buy it because if we see institutionals entering in the game, because you're back on the support level where you can actually make your position. If you want to enter, this is a good level to enter Microsoft. That's a great level to enter in Microsoft. And yes, if you guys can go through it now, it's actually perfect. You have perfect conditions in this market if you guys want to invest in Microsoft. Okay? So as you guys can see here, OpenAI with its new system Azure is facing problems with with OpenAI, okay? Because they have used Frontier on AWS. So Amazon, OpenAI, and Microsoft are all in a problem right now, okay? And they're going to see how it's going to be solved in the future. So the war is still going to go because the Pentagon just said that the US objectives in the war against Iran have not changed since strikes started on February 28. The US has carried out strikes against 7,000 targets inside Iran so far and hit more than 40 Iranian mine laying vessels and 11 submarines, according to the Pentagon. Our objectives, given directive from our America First president, remain exactly what they were on day one. These are not the media's objectives, not Iran's objectives, not new objectives, our unchanged objectives on target and on plan. Hegseth added. He spent several minutes in his opening statement criticizing the press. Hegseth told reporters that the objectives remained to destroy Iran's missile launchers as well as its defense industrial base at Navy and to never allow Iran to get a nuclear weapon. In the same briefing, General Duncan, the chairman of the Joint Chiefs of Staff, said the U.S. military remained on track to achieve all the objectives, and the U.S. was striking deeper into Iranian territory every day. Oh, wow, that's a good question. Nadi asked us a very good question, okay? So, in the past, when let's read the question. When there was war, gold prices would rise. Right, yeah, I agree with you. But now, what's going on? All the gold has gone to USO. So why is it going down actually? Especially for 6 days in a row. I mean, just look at this. Wow. It's actually going down a lot. And this is actually a very good observation. And it confuses a lot of traders right now because normally war equals gold goes up, safe haven. But right now, war equals gold going down. So let's break it down quickly. Gold had dropped 5 to 7% recently, even with Middle East tensions rising. This looks wrong, but it's not. Interest rates are staying high. This is the real reason gold is falling. Central banks are not cutting rates. So inflation is still a problem. Also, high rates are bad for gold because gold gives low yields and bonds now give 4 to 5%. So money leaves gold and goes to bonds. Also have strong US dollars because it's rising because we have higher interest rates and also global uncertainty. Because the gold is priced in USD, strong dollar equals gold becomes expensive, equals demand drops. Also have oil shock, that's changed everything. When you have war, oil spikes, which means higher prices for oil, and it equals inflation fears that go up also. That sounds bullish for gold, but it forces central banks to keep the rates high longer. So oil is up, inflation is up. When inflation is up, the rates stay high. When the rates are high, the gold goes down. The gold already went crazy up in January. It has its all-time high. Back in January, 5,580, and big players are simply taking profits and closing their positions. This is normal after a strong rally. But also we have money that's rotating to other assets. Right now capital is moving into oil, the USD, and the bonds, and the gold is temporarily ignored. So the key insight that everyone is missing, not all wars are bullish for gold. When the gold goes up when we have fear, plus low rates, plus weak dollar. Or the gold struggles when we have fear, plus higher rates, plus strong dollars. And right now, we are in the second case. So, there's a simpler way to think about it. Think of gold like this. Gold equals fear, plus interest rates, plus dollar streak, okay? As the fear is high, the rates are very high, and the dollar is strong. The net effect, the gold goes down. Many analysts say this is a pullback, not a collapse. If rates drop and the dollar weakens, then gold can explode again. So gold is not reacting to war anymore. It's reacting to the interest rates. This is a macro-driven market, not a fear-driven one. Tesla keeps dropping, but retail is still bullish. Where is the smart money actually going? That's a good question. So the money is moving in the market. People are buying different assets such as oil, USD, and many different stuff. This is not making it go to to like a interesting place, okay? That's why the market is going down and up. So AI is booming. Nvidia should be unstoppable. So why isn't it moving higher? So oh my god, you're asking me good questions, Nelly. You're asking me interesting questions. Why is Nvidia not going up? That's a really interesting question. I should cover it in one of my videos actually because it's one of the greatest questions I saw today after your first question. So the first question was great, the second was better. So first time was so nice and you had to do it twice. Well, you're thinking logically by the way. AI is booming. So let's go to Nvidia first, okay? Let's go to Nvidia Corporation. So AI booming equals Nvidia should moon, but the market doesn't work that simple anymore. Right now, Nvidia is a perfect example of great company doesn't mean rising stock. And let's break it down like a trader, not a beginner. First of all, a reality check. Nvidia revenue had grown 65% year over year. We have AI demand off the charts. We have a forecast of 1 trillion US dollars AI revenue pipeline. And still, the stock is flat. That's not random, that's market mechanics. Nvidia isn't early AI anymore. It became a 4.32 trillion US dollars company, and stock already exploded in 2023, 2025. So now everyone already expects massive growth. Even insane news became normal. If expectations are high, you need even crazier results to move up. So the good news is selling the news. This is exactly what's happening. The earnings beat equals stocks drops. 1 trillion US dollars forecast. We still have stock flat and new ships, and we see no rally. Why is that? Because the market already bought before the news. So big funds buy the hype, sell into the news liquidity. And it's so big right now because it's so critical and most people ignore it. Small AI company can 2 times double easily. But for Nvidia, it needs trillions of new money. So to double, it would need to add another 4 trillion US dollars market cap. That's insanely hard because big cap equals slower movement. Right now, funds are moving into AI infrastructure plays such as servers, memory optics, and energy powered AI. Other ship names also. Even news confirms investors shift into other parts of AI supply chain. So AI money doesn't mean Nvidia only anymore. And we also have doubts about AI spending. Markets are asking, are companies overspending on AI? Will they actually make money from it? And that uncertainty is trapping the stock. And Nvidia is not crashing. It's doing this. Sideways equals institutions accumulating quietly. The stock is stuck in a range for months. If we go through here, it has been the case since July 2025. We have been on the same level. If we said to come back from this level, well, around since November, we have been on the same level, and it looks boring. Well, this is where big money puts position. And during takeaway, the market is looking for forward looking. So right now, AI boom is already known. The Nvidia dominance is already known. So price action depends on what's next, not what's current. A simple way to think about it: we have stock price equals future expectations minus current reality plus current reality. The reality is amazing. The expectations are even higher. The result, the stock goes sideways. So Nvidia isn't moving because the AI boom is no longer surprise. It's fully priced in. The market is now asking what comes after the boom. So as you can see here, um, Nvidia reached the maturity level where companies just stay the same. And yes, if you want to double the size of Nvidia, we need 400 trillion US dollars. When can we bring $4 trillion? And as you can see, the same thing for Apple. It's a big company and it's moving sideways, okay? Up, down, up, down. Now it's on 250. We're gonna keep going till it reaches 276. And that's how it's going to work. Up and down every single time. So the everything bubble are we living in the biggest illusion in financial history. So let me ask you something, guys. How is it possible that stocks are near all-time highs, AI companies are worth trillions, real estate is still expensive, and at the same time, people are struggling more than ever? Something doesn't add up. Today we're going to talk about what I call the everything bubble and whether we're living in the biggest financial illusion ever created. This isn't just a stock bubble. This is stocks inflated, crypto inflated, real estate inflated, and even collectibles and luxury goods inflated. Why? Because for over a decade, central banks printed money like never before. Low interest rates plus money printing equals asset inflation. So, what you're seeing today is not just growth, it's liquidity. So let's be clear. The entire system is built on one thing: cheap money. After 2008, interest rates went near zero, the governments injected trillions, markets became addicted to liquidity. So now here's the problem. We are no longer in that world. The rates are high again. And the question is, can this bubble survive without cheap money? On the surface, everything looks fine, but underneath, we're starting to see cracks. Consumers are using more credit, companies are laying off workers quietly, and commercial real estate is struggling. The governments are drowning in debt. So while markets look strong, and also the foundation is getting weaker. Now, let's talk about the elephant in the room: AI. Companies like Nvidia, Microsoft, Google are driving the market. But here's a real question: is AI a real productivity revolution or just the next narrative keeping the bubble alive? Because we've seen this before: the dot-com bubble, the crypto hype cycles, and every time the story is real, but the pricing gets irrational. So, where do we go from here? There are only two realistic scenarios. First of all, we have the soft landing. Inflation cools, the rates slowly go down, and markets continue grinding higher. But then we have the second one, which is when reality hits hard. Something breaks, which is maybe debt, banks, or housing. Then the liquidity dries up, and markets correct hard. And here's the truth: nobody knows which one happens first. So, while retail is chasing hype, smart money is hunting events. So, while retail is chasing hype, smart money is hedging, holding cash, rotating into defensive sectors, and watching liquidity very closely. They're not blindly bullish, they're also prepared. So here's the takeaway: you might not be in a normal market anymore. We might be in a system propped up by liquidity, narratives, and expectations. And when those expectations shift, everything can change fast. So the real question is not what should I buy? It's, am I prepared if this illusion breaks? So Meta keeps going up, but who is still buying at these levels? That's a good and great question. That's a great question, Janet Groove. Thank you so much for your question. I really appreciate it. And this is exactly the right question, because when a stock keeps going up, the real edge is asking, who is still buying? Yes, I mean for sure. Who's this guy buying Meta, okay? So was actually willing to buy more of Meta at this level. Oil is rising, inflation risk is back. So why are tech stocks still holding? So first of all, I will answer Janet Grove for her question, and then we go back to your question about oil rising and the inflation risk going back. So let's break it down like a pro. Who's still buying? The institutionals are not the main buyers, sorry, and not the retail. This is the most important truth. 80% of Meta is owned by institutions. The biggest holders are Vanguard, BlackRock, and Fidelity. These guys are still acquiring and buying more and more every single time. Recently, the billionaire Bill Ackman put $2 billion US into Meta. So it's not random buyers, it's smart money scaling it. Meta is still a cash machine. Even at high prices, the revenue is still $200 billion US. The growth is up to 20% year over year. And this is not just a hype stock. It prints insane cash. So funds think of it like this: yes, it's expensive, but it's still growing fast. And AI is giving it a second life. And this is where people underestimate Meta, because we have massive AI spending up to 135 billion US dollars. We have huge infrastructure deals like 27 US billion dollars AI compute. So why do investors buy? Because AI improves ads, equals more revenue. And when AI reduces the costs, we have automation and layoffs. So even layoffs still is still bullish for stock. It cuts the costs and boosts margins. So It is actually so cheap relative to big tech because Meta trades around 20 times forward earnings and compared to Nvidia and some other stocks, okay? So funds think, if I want AI exposure but less risk, I should buy Meta. And this is something most people don't understand. Meta is in S&P 500 and the Nasdaq Composite. Every time people invest in ETFs, pension funds allocate money, and money automatically buys Meta. There's no thinking involved. We also have the fear of missing out plus performance chase effects. Big funds have a problem. If they don't own Meta and the keeps going up, they underperform. So they just keep adding on dips, buy breakouts, and defend positions. This creates constant demand, even at high prices. But here's the twist. Even though it's going up, costs are exploding. We have AI spending, we have free cash flow that may drop short term, and you have some investors that are worried about the AI return on investment. So the market is split between bulls, which thinks AI will dominate ads, and bears that think their spending is too negative, aggressive and negative. So I'm a bearish actually. And your question is, your answer is, who's buying Meta? You have institutional investors, hedge funds, passive ETF flows, long-term AI believers, not random retail chasing highs. Okay, so Meta is not going up because people think it's cheap. It's going up because big money has to own it for AI exposure, for index weight, and for performance. So at this level, Meta isn't being bought by beginners. It's being accumulated by institutions who don't care about the price, they care about positioning. So thank you so much for your question, Jeanette. And let's move on. Oil is rising, inflation risk is back. So why are tech stocks still holding? That's a great question. I will answer your question now, okay? So why are tech stocks actually holding? This is a type of question that appears randomly and it hits you hard because it's very important, okay? This is exactly where most traders get confused because on the surface, higher oil equals higher inflation equals higher rates, meaning drop on tech companies. But right now, that tune is not fully playing out. And let's break down what's exactly happening under the hood. First, yes, you're right about the setup. Oil just spiked above 110 US dollars, and inflation expectations are rising again. The markets are even pricing rate hikes instead of cuts. And booming this should kill tech, but tech is still holding. Why? This is the key. Right now, big money is thinking this is a geopolitical spike, not structural inflation. And war-driven oil spikes are often short-lived. Markets expect supply to normalize. First of all, but they still think about Hermes reopening, etc. And that's why stocks are not collapsing fully. The S&P is still close to highs. And yes, also AI is overriding macro. This is a new market behavior. For tech, especially AI, we have main growth engine. Investors are literally ignoring micro risks for AI exposure. Even this week, Nvidia Meta AI stocks pushed markets higher despite the war. The translation, AI narrative is bigger than the oil shock for now. And the earnings are still strong. Markets don't move on fear alone. They move on earnings expectations. So right now, tech earnings are still strong, but the growth outlook is still intact. And that's why investors are buying dips, not panicking. NDS positioning was already defensive. Before the oil spike, many funds had already reduced the risk, and hedging was high. So when oil jumped, there was no massive forced selling, and that's why moves look contained, okay? Also, we have rotation that's happening. The market is not fully strong. It's splitting. Energy stocks are going up, the tech is holding, and other sectors are kind of weak. In Australia, for example, You have energy rising, tech plus miners drop it hard. So the real impact is delayed. And this is critical. Oil doesn't kill markets instantly. It works like this. Oil spikes, inflation rise, central banks react, the growth slows, then the stocks drop. We are currently at step 1 to step 2, which is already too early to decide, okay? And also the big players are waiting. Even JP Morgan is warning the oil shock could trigger 10 to 15% market drop. But it didn't happen yet because no break in the system yet. We're still the phase 1 to 2. So the real answer is tech is holding because the market doesn't believe the oil spike will last long enough to kill the growth. And a simple way to explain it is the market is still treating this oil spike like lows, but not a trend. As long as AI earnings stay strong, tech can ignore inflation. But if oil stays high longer, that's where things break. So tech will drop high if oil stays above 110 to 120 US dollars for weeks, inflation prints higher again, and Fed signals no cuts and more highs. So that's when narrative shifts from temporary shock to real inflation problems. And this is a great question. This is a great question, by the way. So, as I told you guys, we can see that the market is still waiting because we're still too early to decide whether the market is going to be up and down. Oh, you spoke very well. I will watch your live streams often. I agree with your points. They are very emotional. Well, thank you so much for your comment. I really appreciate it. Thank you so much. I'm always live at 9:30 to around 11, depends on what do we have to discuss in the live stream. So thank you. I really appreciate it. So next we move on to the other question. Is the market rotating out of safety or preparing for something bigger? I really have to think about this one because it's very important to understand because it's a really high level question and you're thinking exactly like a macro trader, Miss or Mrs. Chuan, okay? It's not rotating out of safety. It's repositioning for uncertainty. And yes, it could be preparing for something bigger. And let's break it down properly so you can talk about it like a pro. What should be happening against what is happening? Normally, when risk goes up, money goes to gold, bonds, defensive stocks. When risk go down, money goes to tech and growth, which is logical. Also, right now we have oil prices going up, gold going down. It's acting safe. You have tech, which is holding, and bonds mix. So this is not a normal environmental role. This is not a clean rotation. It's called a split market. We're not seeing sell safety equals by risk. We're seeing money spreading across multiple scenarios. Some funds buying energy, some holding cash, and some staying in AI tech. That's a confidence, that's uncertainty positioning. Okay? We also have big money that's hedging both sides. This is the key insight. Smart money is doing this. Long AI tech. If growth continues, you have long energy commodities. If inflation spikes, and then you have holding cash if things break. They're not choosing a direction, they're preparing for multiple outcomes. And this looks like a pre-event behavior. Before major moves, the markets often go sideways, ignore bad news, and show mixed signals. Why? Because institutions are adjusting positions quietly and waiting for confirmation. And this is often what happens before a breakout or a short correction. Oh, thank you so much, Nadia. Thank you so much. I really appreciate your comments. Thank you, guys. So the bond market is the real signal and it's not calm. Even if stocks look fine, yields are so elevated, the rate cuts are uncertain, and inflation expectations keep creeping up. This tells you one thing, the system is not relaxed. The market is asking one question. Everything right now comes down to this. Will inflation come back or fade again? Because if inflation comes back, the rates stay high, the tech eventually drops, and commodities win. But if inflation fades, the rate cuts return, the tech explode higher, and the gold rebounds later. So the market hasn't decided yet on what to do exactly. So why it feels like something bigger is coming? Because we have war risk, we have oil spike, we have sticky inflation, and we have overvalued tech. So massive debt globally, and that combination is unstable. But there's no trigger yet. And the real answer is the market is not rotating out of safety. It's hedging uncertainty. And this is what positioning looks like before a major move, not after one. So if you say one thing, if I want to say one thing, I would say this market is not confident. It's confused. And confused markets don't stay quiet for long. So what to watch? You should start looking at something bigger. Starts if oil stays high for weeks, inflation data comes in hot, bond yields break higher again, and that's when tech stops holding, volatility spikes, and real rotation begins. So thank you for your question. It was very insightful. So before ending today's live stream, let's have a quick look at today's news and what's happened while we were talking. So the latest news about the conflict is Hegseth says US unleashed the largest strike package yet. US Defense Secretary Hegseth said Washington will hit Iran with its largest strike package yet on Thursday, adding that Iran's missile strikes have fallen by 90% since the start of the US-Israeli joint assault on the country roughly 3 weeks ago. Speaking at a press conference, Hegseth said Iran's 11 submarines in service before the war had been eliminated, while Iran's military reports are crippled. The comment comes from as an escalating attacks on critical energy infrastructure across the Middle East are driving a sharp surge in oil and gas prices, putting markets worried about a widening supply shock on edge. Brent oil futures had jumped 5.5% to 113 US dollars per barrel, although the global crude benchmark had pulled back from around 119 US dollars a barrel. At the same time, Dutch TTF natural gas futures, the European benchmark, surged 15.2% to 69 euros per megawatt per hour. So, the latest escalation came after Iranian ballistic missiles struck Qatar's Ras Laffan industrial area early on Thursday, targeting one of the most important liquefied natural gas hubs. The attack marks the second wave in less than a day and caused significant damage, though no casualties were reported. So, if you really touch it, the gas fumes right now, you reach a new level in this war. This is something that's never going to end if you keep going like this, okay? So, we see no way to end this war if you keep going in this exact same way. If you don't see something that's going to happen in the next few days, also you can see the US stocks opening the red. So everyone is actually not benefiting from this war, and we should make something about it. Because if we keep going in this same level, we can never find a way out of this war, okay? So if you go through the most popular financial news, for example, as you guys can see here, we have no clue on how is this war going to end or how is it going to actually make us see some bright, okay? Because if you go through all these stocks again, we're still going lower again, okay? So the S&P 500 is hitting new lows, okay? So we are hitting new lows in the S&P 500 and it might keep going like this, okay? So I think something should be done as soon as possible, or else the economy will need so much time to recover. So, thank you guys so much for joining today's live stream. I really appreciate having you guys here. Thank you. And I will see you again tomorrow in the next video where we're going to talk about a lot of important stuff and a lot of key and insightful data that will help you a lot in your trading career. Also, don't forget, go to the first link in the comment section and um you can join my sorry, my WhatsApp, where I help you guys more. So the market misread the Fed, big mistake from rate cuts to risk, and the market just shifted. That was sorry, that was, oh, we have one more question. So this will be the last question of the day by Leon. Why is Circle not acting stronger? Okay, so this is a great question. That is a short question because Circle should logically be ripping right now. You have stablecoins growing. So let's go to Circle first. So it should logically be ripping right now. We have stablecoins growing, you have AI payments narrative, and you have strong earnings. So forget. Yet sometimes it doesn't act as strong as you expect. That's not random, it's structural. Let's break it down like a trader. First of all, Circle already had a massive run. This is the first thing people forget. Oh, let me analyze it first so we can really understand market conditions. Well, this is the first thing people forget. Struck triple after IPO, okay? Went from this level to this level. They crashed from 260, 290, even 300, 250. So right now you're not early. You're in the repricing phase. Even recently, shares are up 100% in a month. After that kind of move, stocks don't just keep going straight up. They pause, they just shake out weekends. And the business model is not as sexy as people think. Circle is a pure crypto growth play. Most of its money comes from interest on USDC reserves. So basically, it's closer to a digital bank than a money market fund that a tech rock. So why this matters? If rates fall, revenue drops. If competition rises, the margin drops. If regulation tightens, this growth slows. So even with strong USDC growth, investors hesitate. And this is big and most people miss it. Circle benefits from high interest rates, but the market is forward looking. If traders expect rate cuts later equals future earnings, and stock doesn't fully price current strength. So the good news isn't enough anymore. Look at this. USDC circulation exploded, revenue up 60 to 70% year over year, and AI payments narrative growing and still not exploding constantly. Why? Because expectations are already very high. Same situation for Nvidia. Have great news, already priced in, needs to price and not just growth. So Leon, I appreciate it. Thank you so much for your comment. You're really sweet, you're really kind. Thank you so much. It's my pleasure to help you guys understand how the financial market works. And by the way, join my WhatsApp. It's down there. I cover everything related to the US stocks. So we're still covering you guys throughout this week. We see you again tomorrow on the same time, 9:20. We start our live stream. And we're going to discuss everything related to the US stocks, okay? So thank you, Leon. Thank you, everyone. And I'll see you again tomorrow. Goodbye.